This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. Happy Monday. Hope you all had a great weekend. This is Not Your Advisor with NYU grad, December 15th, podcast number 574. We have a lot of data and stories to cover, so let's jump right in. So I am going to cover today what did the best during the downdraft of the GFC, Great Financial Crisis, COVID lockdown, and the 2022 drawdown. And you might be surprised what performed the best. I'll compare all three periods, but for free subscribers and notes followers or just free listeners, the first chart is available on the show notes, and it compares the time period that was most recent, 2022, and that sell-off. It'll compare the S&P 500, gold, the dollar, TLT, which are bonds, and Bitcoin. Take a look at it, and you can see for yourself what did well, what didn't do that great. I will go through all three of these in a few minutes with the paying subscribers. With that said, let's go into breadth numbers. We had 244 new highs today versus 227 new lows. That doesn't look off balance at all, but if you dig deeper, it's not that great. We had 35% advancing versus 61% declining in the market, 50% below the 50-day moving average, 47% below the 200-day moving average. Again, no alarm bells yet. Looking at the mega caps, we had a mixed bag. In the green for the Mag 7, Tesla led the way up 3.5%. Meta was up 0.5%, and Nvidia was up 0.75%. Every other Mag 7 was green. You had Google down 0.35%, Amazon down 1.6%, Apple down 1.5%, and Microsoft down 0.75%. Then if you look at sector analysis, that's where you start to see the story. Now, last week we had 3 straight days of safety rotation, right? If you recall. Well, we have that again today. Just a different leader. Last week we had utilities and consumer defensive leading. On Monday, we now have healthcare leading up 0.89. If you recall, I had made a post a few weeks ago that healthcare is a great safety sector to draw upon safety stocks, because throughout history, they've been a safety sector because they're cash flow positive and they pay nice, juicy dividends. Utilities led the way, second place, up 0.75%. Consumer defensive, 0.3%. Consumer cyclical, 0.25%. Financials, 0.15%. Real estate, 0.14%. Pretty much everything else was red. Just a reminder, this is a preview episode of the full podcast. You can unlock the entire episode as well as everything. All of the archives, the written, the watch list, the alerts, the private chat. All you have to do is go to notyouradvisor.com/unlock. It's easy as that, and you'll have access to everything for 7 days for free. Let's go get it. That's my train.
Stand clear of the closing doors, please.